Good morning. Welcome back to my channel. Yes, it is me, the wingman, and I got all of my sauces. Hey, yes, because I love chicken wings and tacos, but most importantly, I love finance and dividend stocks and dividend growth investing. So, normally talk about my channel we do talk about financial planning, money management, and making money in the stock market. Today, we're going to talk about wealth management 101, tips and tricks on how to grow your wealth, maintain your wealth, and yeah. So I'm going to talk about many different ways of how to accumulate wealth from crypto, stocks, and many different and a financial software that I use to manage my net worth. And so, if any of these topics intrigue you, make sure you like and subscribe to my channel. Watch my video from beginning to end. I am indeed the wingman. I am bringing you the sauce, whether it's chicken, whether it's tacos. I'm delivering you the sauce and making sure I'm giving you this fire, because I love spicy, fire content on wealth management and financial planning. So today we're going to talk about wealth management tips to grow your wealth. So here's some tips and tricks. So what qualifies you as being wealthy in America or just in general? The word the word wealthy means different things to different people. So, in a 2022 survey by an investment company of Charles Schwab, it found that a net worth of $2.2 million is what considered to be wealthy, and then having a $774,000 net worth threshold to be financially comfortable. And so, I'm pretty sure I'm nowhere near that, but there's different ways for you guys to achieve that. Especially if you're buying crypto, you win the lottery, you invest heavily either in just in index funds, ETFs, or uh, individual stocks. So like Tesla, Apple, Microsoft. So here's some key takeaways. So when building wealth, uh, it can help to get a handle on how much money you're saving and spending to build wealth. It helps to have a positive net worth, meaning getting your debt under control, getting your spending under control, making sure that you're making money, whether it's through your job, uh, side business, a business, real estate, and investments, making money. It says setting realistic financial goals and investing in products like, again, like I said, stocks, bonds, mutual funds are two ways that you might be able to propel your wealth building plan. So what is wealth building? So the definition of the wealth probably depends on your own experience. As the Federal Reserve Bank of Dallas puts, some people consider themselves wealthy because they live in an expensive house and travel around the world. Others believe that just simply being wealthy means that you're able to pay your bills on time. So, what is considered being wealthy? What is considered wealth building? It all depends on certain people. So, if you are a frugal person, being able to pay your bills on time, having your house paid off, and maybe having some money to invest into either your children's or grandchildren's uh, education and tuition may be what's in store for you in terms of consider wealthy. Other people, depending on if you live on the East Coast, West Coast, basically being able to have multi-million dollar portfolios and investment properties, traveling all over the world, maybe that is what's considered being wealthy. So, however you define wealth, the process of becoming wealthy is known as wealth building. As in its core, the core of the process of wealth building 101 is one, setting a budget. In a lot of my videos, I talk about how to create a budget, many different personal finance softwares like Mint, Intuit, Quicken, Quicken Simplified, or just using Excel spreadsheets to create a budget and put yourself on a budget on a bi-weekly basis, a monthly basis, for you to be able to control and understand the money that you got coming into your account and money that got leaving your account, saving and investing your money, and curbing your debt. So number one, understand your net worth. So net worth represents the value of your assets after excluding your debts. So knowing your net worth can help you determine your steps towards building wealth. How do you determine your net worth? So basically, it's easy. So you have all your assets on one side. You have all your debts listed, and then assets minus debts equals your net worth. And so usually in your 20s, your net worth, 20s to early 30s, your net worths are typically are in a negative because you are going to school, getting loans, car loans, probably student loans, and I also probably paying off this personal debt. And so, whatever money that you are uh, growing in your savings account, your 401k, your investments, whether it's your uh, your own IRAs or Roth IRAs or your own, let's just say, a taxable accounts, and also just the value of your home. So basically, you have the mortgage of what you have to pay the house off as a debt, but then also the value of the home as you stay in your home, or if you buy just condos or multi homes or whatnot, the value of the home eventually by either owning it for like 5, 10, 15 years, the value of the home will increase, and then it will balance out so that when you want to sell the house, boom, so at a surplus. And then also, what is the market value of your car? And then another assets would be like crypto. So if you have crypto, Bitcoin, Ethereum, maybe XRP, uh, then there's other cryptos like Quant and whatnot, and just hold those. And then you have silver, gold, just solid assets, and holding solid assets, and subtracting it from your debts is your net worth. Number two is set financial goals. And so for me, I do this a lot where I set a lot of financial goals on the short term, on the midterm and long term. So a lot of midterm and long term goals for individuals who wants to buy themselves a house for their family and their children. Some short term goals, it goes hand in hand with just budgeting. So budgeting to buy a car, budgeting to uh, you putting $250, $300 into your ETF or in your index fund, and then guess what? You're getting a raise. You are getting more money. You just started a business on YouTube as a content creator, or you started a business outside as a plumber or whatnot, and then that extra income, you're able to increase how much you're paying into your index funds or into your dividend portfolio from $250 per month to $500 per month. So those are just those financial goals that you are setting that's attainable. And so you right here, you determine what matters most to you. Come up with a list of short-term, mid-term, and long-term financial goals. I gave you some. Assess your income and expenses. You assess your income and your expenses through your budget. I'm not going to go over how to create a budget, and then you monitor your success along the way. You use Empower, which we're going to talk about later on, how to assess your success of seeing the growth of your net worth over time, and then you make adjustments as needed. And then three for the tip is earn income. So as we all know that there's active income, passive income, portfolio income. So a lot is you have active income is actually actually having to go to a job, and whatever you put, whether it's white collar, blue collar, put in sweat, blood, tears, dollars, time equals dollars. But then you get to the point where you have passive income where you have like passive and your portfolio income where you set you're a content creator, and you have your you are basically creating your content, but then which is active income, but then eventually it becomes passive income because then it begins to continue to pay you if you make evergreen content, months down the line, years down the line. You have your dividend portfolios, real estate portfolios. And so you whatever your niche, whether it's investing, uh, stock market investing, making money in the stock market, stock trading, passive income. Uh, I would say also just investing into ETFs, index funds, however you invest into the stock market to make money. It all goes to earning income. And then basically the before save money automatically. The best way to do that is it's a method, or what they call is pay yourself first. So like with your 401k, having your money go into your 401k immediately, so you don't see it. That's how you save money automatically. And then also with these brokers accounts like Charles Schwab, E-Trade, M1 Finance, Fidelity, you are able to, also Webull, you also able to go into the account and have the money, and you choose a day on a bi-weekly basis or on a monthly basis that you can have money go into these different accounts to basically, so you can save your money and invest your money, and you don't even have to worry about it. And then basically number five is spend your money consciously. And so always, stick to your budget, create shopping lists, use coupons if you need to. Don't let people uh, you know make you feel bad about just trying to get deals, trying to get sales. Oh, and what's really big in America is debt, paying off high interest debt. And so there's different methodologies in paying debt. It's one is called the debt avalanche. The debt avalanche method involves eliminate your highest debt first, and then you go to the next. So let's say you have one debt that's at like 15% interest rate, private credit card, or whatnot. You use your money to focus on eliminating that debt, and then with the extra money that you have coming in on a per monthly basis, then you can worry about the next highest, which is maybe the next highest, maybe 10%, and then use all your money to attack the third highest. Because then what happens is that the money that you're paying on the first highest, that it frees up. So let's say you paying $50 per month at the highest debt. Once you eventually eliminate that debt, now you have $50 per month to free you up. So you take whatever you're going to pay on the next highest that plus the $50 per month, and that's boom. Now there's another methodology called the debt snowball, but in the investing community we call it like the compound interest, like compound interest, the interest snowball, uh, uh, growth dividend snowball. And so instead of focusing on the debt with the highest rate, the debt snowball method involves paying off the debt with the lowest balance first, and then you take that, and then so basically the debt snowball is the debt avalanche, but in reverse. So that basically you start off so small, and then you work your way up to the highest interest rate, and then like with a snowball, it starts off small and you pack it, and then it gets bigger, and then you get momentum. So uh, usually that they say build in an emergency fund, and usually it really does help. So while you are saving and you are investing, at least try to put at least 100 to like $150 per month into having a build an emergency fund. Usually they say build to have an emergency fund of between 6 to 12 months. I would say lean more towards on like 6 months of expenses, and then when you do that, that's could come out to maybe like 5,000 to about $10,000. You don't have to have it all at once, but it helps. So that, like say, for example, you lose a job, or you lose your job, or something happens and you need to go and pay for your air conditioning unit, or your water boiler in your household, or let's say your HVAC, for your air conditioning, it goes out in the summertime, and you, like for me, one time I had to pay, and it was like it cost me like $3,000. And so if I didn't have that money to the side, then I would have been stressed trying to figure out how to come up with $3,000 to pay in the hot heat of Texas for my air conditioning unit. And then right here, number eight is 8, 9, and 10 is just basically, it says invest your savings, work with financial professional. So once you get to a point where you're building up your wealth and whatnot, then you're gonna look for a financial planner. So you look to like type in through YouTube or Google, where is the nearest financial planner that's near me, financial planners, wealth management. Uh, money managers, so that they can help like tax professionals, tax accountants, to really help you maintain the taxes of your wealth, and of your and protect your wealth. And then basically number 10 is in money management, wealth management 101, is protecting your wealth that you build. And you protect your wealth that you build through insurance. So having property insurance for your uh, you know, just for your house, having car insurance, home insurance, health insurance for you and your family, disability insurance, just in case if everything ever happened to you on a job or outside a job, you are on, a ladder, you fall from a ladder, like dealing with like the shutters or whatnot. You have insurance to help you to, with your income on top of, if you get hurt at work, just in case to pad um, your paycheck to help you have money coming in for you and your family. You have life insurance, and then you have long term uh, insurance. So, how to build wealth in a nutshell? Building wealth takes time. It takes effort. It takes consistency. Building a combination of sensible saving and spending practices. It's making money. It's having a passive income, creating a side business, making sure your assets is more than your liabilities, your debt. And then so next level, I'm going to talk about different things that you can invest into to build that wealth. So a lot of people, as they see, there's many different avenues you can go about to building your wealth. As a starter, as a beginning investor, so you're going to have your 401k, you're going to have your money going into your 401k, so you have that building that. Great. Now, uh, you open up your own IRA or open up a taxable account, and in that taxable account, you are going to choose either VTI, the total stock market, VU, uh, the SP 500 ETF. Right here, you see VTI. It's the total stock market. It has like 3,600 stocks in it. It costs $203 and 73 cent per share. And what you do is that if you want to buy $250 or $500 worth of VTI, that's all you do. You do it either do it on a bi-weekly basis, you do it on a monthly basis, and then you'll begin to see your wealth increase. And then I'm going to go through a diagram to show you how it increases over time. And just let me just show you just the holdings in VTI. So the holdings in VTI, it's the total stock market. It has Apple, has Microsoft, has Amazon, Nvidia, it has Google, Tesla, Berkshire Hathaway, Inc. Class B. It has Alphabet Inc. Class C, which is Google. It has Meta platforms, which is Facebook. Has ExxonMobil, and then it breaks down into the percentages. And so normally individuals who have been investing into the stock market for a long period of time, they know about VU, they know about VTI and these Vanguard ETFs. But as a starter or intermediate investor in trying to build that wealth and understanding wealth management 101, you have to understand the different avenues you can go. So you can go the ETF index fund route where it protects uh, your money, where you are investing into a pot of stocks, and you have all these different stocks right here into one fund, and then basically you are diversifying right here. See, like the holdings is 3,911 stocks in this ETF, and so you are investing into shares of these 3,000 stocks. And so you're betting on the American economy. Another ETF to help grow your wealth of wealth management is Vanguard's Growth ETF. It's $249.78. This ETF focuses more so on the growth. Now remember, high risk, high reward. So this ETF does come with more risk compared to owning VTI or VU, but in understanding and trying to grow your money fast and grow your money uh, more, like you see right here, if you would have invested 10 years ago, and then you see now, you see that, you see that the graph going up. Your money compounding and growing up, and that's 207.61% increase. And now the reason why a lot of these numbers are down right now because we've been in a bear market, recessionary type period recently, and uh, so you have to understand that. But investing now will help for everything that growing your wealth into 5 to 10 years down the line. Because you usually we only in like recessionary periods between maybe 6 months to about year and a half, and then usually we go into like a bull market, and usually like our bull markets last like 5 to like 8 years. And so whatever you invest now, you'll see it grows dramatically a lot down the line. And then the holdings in VUG is, I'm sorry, has again Apple has 13% in Apple, 11.63% in Microsoft. You have 4.88% in Amazon. You have Nvidia, Google, Class A, Tesla. But this also is, what makes it different is that down here it has Mastercard, Home Depot, and also has Visa, and then in here. And then lastly, if ETFs are not your cup of tea, then you could just invest into just an index fund. And the index funds is typically what index funds and mutual funds typically you see in your actual 401k plans. And so I use Fidelity, but depending on the brokerage that you use, you can use Charles Schwab, you can use M1 Finance, E Trade, Webull is a good broker account that people use. And so, but with Fidelity that I use the Fidelity S&P 500 Index Fund, and uh, use that for my job, and then also use that for personally wise. And so, this index fund, it costs $143.05 per share. And so, what you typically tend to do to build your wealth is that if you would just buy this SP 500 index fund, follows the SP 500 index, which is the top 500 companies in the United States. Again, shows you the holdings, which is similar to VTI, which is similar to VTI and VU. It has Apple, Microsoft, Amazon, Nvidia, Tesla, uh, Facebook, which is Meta, ExxonMobil. And so basically, you're just going to be buying $250, $500 of this particular index fund every 2 weeks or every month for 15 to 30 years. And then you're going to watch your wealth grow. And so basically, in the next diagram, I'm going to show you by choosing these VTI, VUG, or uh, FXAIX, the Fidelity 500 Index Fund, how it grows your wealth. So let me show you real quick. So right here, if you go to investor.gov, it has a compound interest calculator. So let's say that you're starting out with an investment of $5,000, and uh, you're going to be looking to put $650 per month into either VOO, VTI, which is the Vanguard's total stock market, or VUG, which is the Vanguard's growth ETF, or Fidelity's FXAIX, right? Any of the 3 or 4 of those, right? You're going to put $650 per month, 300 or $325 biweekly into out of these funds, right? And let's say you get an interest rate of about 12.5%. Uh, on a 30-year basis, you're starting out with $5,000 on a 30-year basis on $650 per month. You see how you start out, and you either buy VU, VTI, or VUG. In VUG, you actually receive higher annual returns because it's more growth. But I wanted to keep it more simple. And as you see right here, you're starting out with $5,000, and you do the $650 into either VUG, VTI, or VU. You see how this is how your money grows. This is how your wealth grows. And you see over time, let's say you're starting at 25, you're starting out at 30 years old, 35 years old, even 40, right? You want to have some money for you to retire, leave for your family, a net worth. And this is outside of just owning a house, real estate. This is just, and then also outside of your 401k. This is doing extra, uh, taking extra steps to for financial freedom and for wealth. And as you see right here, uh, after 20 years, you'll have a nest egg of investing of $648,339.32. Let's say you decide to continue to go at it for another 5 years, you are at millionaire status. And then for another 5 years, you are at that $2.2 million, which, according to the article, considered wealthy. And that's just what just invested into VTI and VU. That's not if, let's say, you decide to uh, invest into like just single stocks like Apple or Tesla, Microsoft, AbbVie, right? Where when you invest into single stocks, high risk, high reward. Another way, another way to increase your wealth is through crypto. And so through crypto, it's high risk. Like it used to be single stocks, then ETFs, index funds, mutual funds, then like bonds. Now it's like crypto, single stocks, and then ETFs. And so why I have the company Strike here is that I use Strike to buy my Bitcoin. So when you sign up and if you have iOS, which is for Apple, or Android, you download Stripe, and basically this is how I buy my Bitcoin. I buy my Bitcoin. I have it uh, right on here, and it's really easy. Like you set up your account, you uh, you set up your account, you set your direct deposit, and I like it that I'm able to either buy the Bitcoin directly, or I can set up for with my job with the direct deposit, and some of the money like from my direct deposit, like I could have like $100 go right into buying the Bitcoin. It's really sweet, and so that I can have the Bitcoin. And so definitely having exposure to crypto market, cryptocurrency in your financial planning helps in terms of curving inflation, curving like these interest rates, and fighting these uh, you know this recessionary periods, and so and trying to just max out and juice up your returns, because with inflation being at 4.55%, you're gonna need returns more than 5%. And usually like Bitcoin and Ethereum, and I mean, and we don't know what's going on with XRP, but holding a little XRP just to, you never know. And then also holding like other cryptos like Polygon, uh, you know, all the Matic and all of those really helps. And so I use Strike. So right here you download Strike, and then you have your little global wallet, and then you're able to buy Bitcoin. And then I say, with the whole money management, you start out with $50 a month buying Bitcoin, and then you can increase to $100 per month. Then you can increase to maybe $200 per month to have that you know that cryptocurrency in your portfolio to help with boosting and juicing your returns. Lastly, we're going to talk about the financial software that I use that you can use to uh, manage your wealth management. So, uh, for tips and tricks for growing your wealth and managing your wealth management, I would say use Empower. And so it used to call Personal Capital, but now it's called Empower. And then you can use, so once you link up all your accounts, your checking account, savings account, your credit cards, it does like a personal finance management for you, where uh everything that you've been paying for, whether it's your bills, uh everything that you've been using to uh in terms of setting goals for yourself, it's all through here. So I use this here for budgeting. I use this here for my investment data, and then also I use it here to make sure I stay on track of looking at, like, okay, how's my me saving up for my emergency fund, and it tells you like when your emergency fund is running low. Yeah, right here it shows you how the market is doing. uh and then also for me, I set goals of just for my retirement. Like I set goals of, for me, saving like $12,000 per month, into like putting my money into the stock market to make money online through my online business, and just leveraging the stock market. And right here, then you can just right here see like how your portfolios and your total net worth, how's it going, and then you can go through here where you can look at your budgets. You can link your bills to see what bills are is going to come up, and then also you can look here and you click investing, and you can actually see how well your investments are doing compared to the actual market. You can look at this to see your like right here are like a lot of my investments where I have my Fidelity accounts and uh, real estate investment trusts and Charles Schwab, and just because I have many different investment dividend portfolios. And then also, if you really want to, you can also reach out to Empower and reach out to their wealth management advisors. And then once you up to that point, you can get a financial advisor to help you plan in regards to taxes, even more advanced tips and tricks on either growing your wealth or preserving your wealth, either through just preserving it through just taxes, uh, become more efficient, and then also make sure that there's nothing that in regards to any pitfalls that may come up currently with inflation, monetary policies, or things that you probably just not even thinking about. So all in all, overall, then also you can utilize like the retirement planner feature where I utilize the retirement planner feature where uh, I actually link like my 401k and everything to see what's the fees that either the ETF or mutual fund or whatever is charging me. So like right here, I see that whatever the values that I currently have, it would tell you how much in annual fees that you will pay on a annual basis. And I like that because one of the number one indicators of what's that would take a lot of your money and your wealth, invest into either index funds or index funds, ETFs, or mutual funds is actually the expense ratio. And usually when the expense ratio is really high, like for example, you see right here 0.11%, which is not high at all. But there's some like QQQ or other ones where the expense ratio is a lot higher. I've seen where fund managers will charge you like 1%, 1.5%. That eats into your returns on an annualized basis, and then it's like throwing money out the window and into like a furnace full of fire. And so I right here I love to see uh, just in whatever I'm investing, like what type of fees am I paying? Because at the end of the day, when I'm ready to retire at 50, 55 years old, I don't want to come back and look at and I to see that I left money on the table. And so, yeah, and so basically, you definitely can utilize Empower Personal Capital to analyze your net worth to see how you're doing with your net worth. You can include your house if you want to, and then you can see the overall market of your assets, your debt, your liabilities, and to see how you're doing in regards to your net worth compared to your peers, compared to people who are a lot younger than you, who are a lot older than you, to see if you are on track. And so, hopefully, you guys enjoyed this delicious content on wealth management tips 101 and uh, how to make wealth, how to preserve wealth, and usually, I went through ETFs and index funds that you could use to build wealth. I went through an example on how your money will grow by you staying consistent. Consistency is key, and then also like we talked about crypto. We talked about crypto because it is 2023, and having crypto in your portfolio will be beneficial to receiving those high returns. And so hopefully you guys enjoy this delicious content, and hopefully you guys enjoy your day. All right, peace.